Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for Wednesday, November 27th, 2019. I skipped the last couple end-of-day videos because it really wasn't a lot to report, although we had one significant development. IWM broke out this week. I highlighted that for members in one of the mid-session updates earlier this week. But as I said before the market opened for trading this week, I posted out to members. I personally don't trade the week of Thanksgiving. I take that week. I usually take it off completely, or I'm on the site. I'll answer questions. I put out a couple trade ideas this week, potential setups. But what I've said, what I've learned over the years or experienced, is you have a much higher incident or risk of whipsaw signals. A whipsaw is when a stock breaks out. Maybe you have a bullish or bearish chart pattern. You get a breakout. It looks convincing because with low volume, it doesn't take a lot of buying or selling pressure to move a stock. So again, so what I typically do is I avoid taking breakouts that week. Take them with a grain of salt. If they stick the following week, as I said, maybe IWM, if things look good or we get a back test, maybe jump in there next week. We'll see what things look like. But again, that's just been my experience of the increased whipsaws. So that's just keeping it light this week. And what I'll usually do too is any swing trades that I had, swing positions, I'll widen up my stops or suspend those to prevent stop raids. I mentioned that earlier this week as well. All right, let's just run through the charts. I'm not going to get into the futures. We'll just do a quick recap on the index ETFs and maybe XLK. This is a long-term chart of SPY right here, a weekly chart, and you can see here's our bull market trend line in blue right here. And as I zoom in, I have different draws, different trend lines, but that's the primary trend line there. And we broke down last fall. That's right here, very impulsive move down, broke and back tested, and then that was our drop down into the December 26 lows, and we back tested it. And this week for the first time we back tested again. We closed on a back test of that level. So that's what we've been doing since really last year. And again, these are long-term charts. The negative divergences that have been in place, nothing's changed there. As I always say, and I have to say repeatedly, divergences are not a sell signal, far from it. Just like overbought is not a sell signal and oversold is not a buy signal. They are indications when you're oversold, like we were right here in the crosshairs. You're probably going to get a trend reversal. When you're overbought, well, like we were right here, that's when the market topped. But here's what happens why I always say that overbought and divergences are not sell signals. We became overbought there, and what happened? We kept going up. We stayed overbought. Eventually, like most corrections do come from overbought conditions, but here's one too where you had overbought and it was just a minor pullback. So what I always say is divergences and overbought conditions coupled with a sell signal, and right now we don't have the levels that I've been watching, the 8200 on NQ futures, the comparable levels I've highlighted in recent weeks on ES and SPY. They've not been taken out, so we're still in the near-term uptrend. And of course this week, like I said, was really a low volume trading week, so not too much to read into it. So that's it. There's SPY. Same thing for QQQ. No technical change on the weekly chart. The divergences that have been building since back here are still very much intact, but we don't have any sell signals right now there. Here's the small caps weekly chart. Let's see if I have this one more. I'm going to get to the daily chart on the small caps. So I'll get to that in a second. That's probably the most significant thing we saw this week. And then where is XLK? Tech sector. Tech sector is going to mirror QQQ, and there it is. You have the same divergences that have been building, and there's that trend line off the lows on the 24th of December, or 2020. Was it? Yeah, it was the 24th. No, 26th, day after Christmas. Or yes, it was the 24th. That's right, 24th. We bottomed. It was the day after Christmas that the rally began. Okay, so that's really, like I said, not much to talk about there. Let's get to the daily charts. Here's the same trend lines here. We're watching these trend lines off the October 3rd low. And like I said, we broke down last week in XLK, but very exactly not impulsive. You want to see impulsive selling, no follow through. So we back tested 1, 2, 3. Today we closed the week on a back test of that trend line. We still have the divergence here on the daily chart. That is a divergent high. Just what we need now are some type of sell signals. I mentioned the PPO histogram made a bearish crossover recently, which helps to, gave us a couple check marks there, but we really, at this point, need to see the recent lows get taken out. We need to see what you'd have to see for any type of, to give you any type of degree of confidence you're going to see at least that 3, 4, 5% pullback at this point would be a rejection off there, and it could be quite a bit more, again, based on the divergent high. But right now we just need a little more evidence. So again, you had a bearish PPO crossover right here. There was one right there, and you can see 9%, 12% correction. So that's, like I said, a check mark that was given last week, but we need a little follow through this week, or next week, I'm sorry, to firm that up. And of course, we need to see those shorter term levels get taken out. And if you haven't caught my analysis in a while, that's it. About 199.80 on QQQ is a level I was watching. And you could kind of see it here. If you extend this line out, 60-minute chart, do that. You can see we're still still divergent high right now. Probably about flat line divergence on the RSI down here. That's when you have an indicator, prices making higher highs, and your indicators need to either be making lower highs or equal highs. So it really has to happen soon, or you burn through that RSI divergence. And again, like I said this week, let's just see what happens. Let's see how the market follows through. I'll get to some post Thanksgiving statistics here in just a second. All right, so that's, again, work to be done, and that would be, I think, if you just kind of visualize it this way, we had some consolidation here last couple weeks right around this level, and so that's why I had that line there at 199.80. Never was taken out. We held support there, and we've continued to move high. That was comparable to my 8200 support level in NQ, which I believe needs to be taken out to open the door for a pullback to at least this target zone. Again, that's a minimum target. Could certainly morph into something more, but as of now, we'll just watch and wait for some sell signals. And if you're riding this rally up long, I would just recommend trail stops. If you're buying back dips, look for these levels, and then watch that. You might want to have a stop if you see 199.80 go with conviction. All right, XLK, I think I hit on the daily chart. Yeah, the back test, and QQQ I already showed you. So really the big one this week was IWM small caps. I'll zoom down here, and let me just turn off all the lines for a second and show you what I've been highlighting. Throughout 2019, we've had a pretty tight trading range, a sideways trading range in IWM, all except this. We had down into that low drop on the 24th, that meltdown, followed by an equal V recovery right there, and that was in early January right here. Since then, we've been trading back and forth between these levels on IWM until just recently. And I have that line. It's not a hard line, but it's there about 159.40, 159.40, 150. You can call it 160 if you want. And the only thing that stands out is we did have, if you zoom in tight right here, we had two similar green candles back here. Let me move that trend line. So we had a pop above that range once. It was impulsive. You had some big green candles, and it failed. So like I said, this is certainly breakout, and I'll give it credit. It was impulsive, at least compared to the recent volume. Volume's been very low, and so when you had a breakout, again, there had to be a ton of stops above that level. This is such a well-defined resistance level. It'd be hard to miss, and especially this trading range. So the breakout is there, and so far, like I said, I would give it a lot more legitimacy if it occurred on a week where we didn't have such low volume, in a holiday week like this. So what I had said earlier in this week to subscribers is, if let's say we pull back in, ideally IWM, and you may get an objective long entry here. We pull back to about, see, it's about 159 or so right there, that line. That would be an objective long. Come in and back test the breakout. Sometimes when you back test a breakout, it's not uncommon. In fact, it's quite usual to see prices come down a little bit below. So really about right here under this recent cluster of candles, you can see. Let me put a line there. These guys here. That would be, if you're looking to go long the small caps. If you were like me, a little suspicious of the breakout this week, you might get a long, and I can tell you this, it's objective to go long there. Whether it holds or not, well, that's what stops are for. You have a stop somewhat below that level. So if you're looking for an entry, who knows, maybe it never comes. Maybe we have a big ramp Santa rally everything into the end of the year, but I'm just pointing out that would be an objective level to buy a back test. Anywhere down to, as we approach, maybe step in a little bit above 159 in case they step in early and buy it, and then maybe down to 157. That's not a big range. You're talking 2 points on $160 security. That's not much, percent, less than 1.5% or so, and then again a stop below. And now, if we come on down through them, we fail, you may very well see something like this, because that was a failed breakout, or aka bull trap, false breakout, whipsaw, whatever you want to call it. And those are usually followed by pretty powerful selling because the traders get caught off guard. Everyone that took this long will have stops. They'll start getting stopped out. The shorts have all but left the building, so there's not many shorts to cover on the way down. And as you can see, when IWM fails at the top of this range, in 2 of the 3 times, that was really the range wasn't established yet here. But since then, every other time this year, since what was that, early May, when we failed there, it was a very quick trip back down to the bottom of the range, as I'm showing you there. So just things to look for next week. So let's see how the market trades. Like I said, the price action's clearly been bullish lately. Divergences and other red flags continue to build. They just haven't played out yet. And of course, there's been that quick and sudden rapid shift in sentiment where recession fears have just seemed to be completely now brushed under the rug. Okay, well, that's out. We've dodged that bullet. That's a little concerning. Like I said, I've talked about this recently. I can't recall such a rapid shift in sentiment in just a period of about 3-4 weeks. So we'll see what happens there. Okay, so those are levels to watch. Where it goes from here? Well, I'll say this: if the breakout sticks, and of course, it's going to depend on the large caps continuing to rally. If the large caps were to correct, say 5-10% or more, I really doubt the small caps are going to go up much more. But this is a powerful, trading range almost all year. Think of this like a coiled spring building energy. So let's say that breakout sticks. I at this point, and this is what I believe I said to subscribers earlier this week, if you took it or you plan to take it on the back test, or if we get follow through next week, I would just trail stops up, keep a relatively wide stop, and just trail it up as long as that goes, because that's a legitimate breakout. In other words, you can have a stop down below where I showed you before in case the breakout fails. That's probably the best way to trade that. And if you want to short it, wait for the breakout to fail, and then be quick, because once everyone realizes it's failed. And remember, don't trade IWM in a vacuum. Look at keep an eye on QQQ and SPY, because at the same time, if IWM falls back below those levels and then SPY happens to say pull back to support, I don't have any clean, well, I can tell you right now, 302, that's a big level, about 302.50. Why? Well, because that's the previous, roughly where the previous 2 highs were, right there. So that would be a natural pullback level for SPY to go long. But if the buyers don't step in there, look, these divergences are going to play out. And remember, nothing has changed for me technically. We had back here, these divergences built. By the time everyone gave up and said, oh, they don't work, it doesn't matter. And again, they're not sell signals, but this was. We had a breakdown here. We broke down in tech. Right when we broke down, I highlighted that. We had a major sell signal given, but with tech and QQQ breaking down. And yes, the divergences played down. They played out quite a bit. So, point being, is that my longer term to intermediate outlook has not changed, because this hasn't changed. The weekly charts that I started with haven't changed. So I'm continuing to fry better fish elsewhere, and of course this week again keeping it light, but my focus has been on commodities. I did an extensive video on ag commodities today. Members, I followed up after the close today with an update on crude oil, natural gas, and of course there's individual stocks and sectors that just to me have much better profit potential. The market is up, I don't know what it is, 4.5% or so since that breakout of the last high there. The broad market, through this week, just about 4%. So it's still just a marginal new high, as every other high here in the last couple of years were right here. Since this reaction high back in January of 18, that was a new high, but it was a marginal high followed by correction. New high right there. We took out that previous high, correction. And this is the pattern. Wash, rinse, repeat. So that's why I'm more on the lookout for sell signals. Charts are a little bit what's the word I want to use? Not as clean anymore because we had these breakdowns and back tests, and we're not getting. We haven't had any follow through to those breakdowns. But like I said, now we have the bearish PPO crossovers. Let's just watch those levels, those horizontal price support levels on the 60-minute charts, and then we might get at least a quick pullback trade, and again, quite possibly more because of this if these start to play out. Otherwise, we'll continue to focus on better trading ops. And as I wrap this video up, I want to just go over this post I made earlier in the week, post-Thanksgiving stock market returns. I'm sure a lot of you have seen there's all types of statistics out there. And they usually measure from Thanksgiving to the end of the year, things like that. What I did in this, and you can read this post. I put it out the other day. If it's subscriber only, no, this is public content. It's just general analysis. I want to say, take a look at it. Go into the site. It's under home or market analysis. You'll find it there. It was posted earlier in the week. And what I did, real quickly, I took screenshots of charts showing you. I just decided pick a point, so I picked the day after Thanksgiving, going back was that 6 years, 2013, and I just measured from the high on the day after Thanksgiving, so it's going to be Friday, and I looked for the first, where did the market go from there? What was the first drop of 2% or more? Was it up or down? And just as I said in there, it's a wash. Now keep in mind, we're in a bull market, but yet half the time the market dropped initially right after Thanksgiving, half the time it fell over 2%, and the other half it rose over 2%. So you can see these stats here. I'll zoom in. Day after Thanksgiving, here's a measuring tool right here. So down into that low. These are daily candles, so you could see how long it took. And then from there it rallied. So if you held tight, by the end of the year, and all these charts, I cut them off through December 31st. You can kind of see. And again, I said in here, there's not any clear pattern. I didn't see an edge, and I see all kinds of statistics put out all the time where this week is traditionally bullish, that week is traditionally bullish. I'm very skeptical of those things. You can see them in the Trader's Almanac, that'll tell you any period of the year, any month, which ones, what the average returns are, the range of returns. But I like to couple that in or factor in. I'll look at that stuff, but really it depends on what's happened leading up to that point and how do the charts look at the time, because you see in any of those statistics what usually happens. From what I normally see, when there's a clear pattern of a week or a month that is over 50 years has clearly been bullish. No, in other words, it's more than just a 50-50. You have a clear bullish or bearish period. What happens is usually when it goes the other way, instead of being in the average range, it's usually those outliers are pretty big. In other words, so if you have mostly a very clear pattern of a bullish seasonality, when it's not bullish and it goes the other way, it's usually a big down, and vice versa. So let me go through these real quick. So there it is. There's initial drop 2.3 in 2013, 2.43%. This is 2014, day after Thanksgiving. From there, we had a little kickback, tested up again that level, and then we dropped almost 5%. And by the end of the year, we were still down below where we closed it, and that was again 2014. We ended the year below the where we peaked the day after Thanksgiving. 2015, we dropped almost 5%, 4.66%. We had a little lift a couple days, looks like the following week, but less than 2%. We dropped 4.6 down into the December 14th low, and then we closed the year down below where we were the day after Thanksgiving. This is 2016. Day after Thanksgiving, we had a little pullback, nothing much, and then we rallied up 3% from, again, measured from the day after Thanksgiving high, another 3% gain, and then we drifted a little lower by the end of the year. 2017, that was a 3.67 rally if you held from the day after Thanksgiving, and we closed the year a little bit below that. And then last year, we had what happened day after Thanksgiving. Keep in mind, again, we were in this was during the correction. This was that consolidation period after the initial drop in October. We consolidated, and so we had a lot of volatility. So this is why these numbers are a lot higher than those other years. And so you can see a 6% lift right after from the highs on the day after Thanksgiving, 5.92%, followed by not an 11%, much bigger than 11% drop. I measured the 11.2% was again from this point here. So if you, in other words, if you held on, you were happy. You were up about, if you were long, about 6%, and then down to the low on December 26th, you had a drawdown from that point about 11.2, and you closed the year, of course, below that level. So that's it. And again, these aren't compelling, but I find it kind of interesting. And again, so the takeaway, like I said, it was a wash with half the post Thanksgiving gains. You know, again, the first 2% or more gain or loss, half of it being a gain, half being a loss. And again, that's why I'm not. I'm kind of taking it light. Let's see what happens over the next week or so, and then, as we usually did here, I think by midweek next week, the market will probably pick that direction because that's what it usually did. Whether that next direction will be up or down. Okay, we'll wrap it up here. I want to wish everybody here in the States or abroad, if you're from the States, you celebrate Thanksgiving, a happy Thanksgiving, and to everybody else out there, have a great next few days. Again, U.S. markets are closed tomorrow, early close on Friday, and I'll be out of town on Friday. So these any updates will pick up on Monday. This has been Randy Finney with Right Side of the Chart. I hope you enjoyed it.